Hey everybody, this is Alex from mytradersjournal.com, and today is Friday, May 19th, which is the third Friday of the month, and therefore options expiration day. I only have one option expiring today. That is on the May 138 put for IWM, for small cap index ETF. It is in the money. I was a little bit more aggressive on it. Right now, IWM is trading at 136.53, and my strike is at 138. So I'm about $1.50 in the money, but I sold it for $3.46, so I have about $200 of profit, roughly. We'll see what I can get when I close it out in a minute. I did think about taking the assignment briefly, but I prefer just to sell puts on it. The risk reward is about the same between a naked put and a covered call, and I like having the cash in my account, so it's just easier for me to monitor that way sometimes. Not much of a difference. Anyway, I'm planning on rolling the May put over to July. It's about 9 weeks out, and right now it's 2:20 in the afternoon. So second half of the day, and I can try to figure out what's going to work for me on this order. I compared a few of these, trying to figure out what's going to be best. So here, let me scroll, condense this some. These three right here are the three I was looking at. I'm at 138 is the strike right now I have. I don't think I'm going to go any higher than that since it's already in the money. But when I wrote these down earlier, it was at these prices. So now we have three. I could probably get 343 pretty easily, so I'll raise that a penny. That is three. I bet I can get 493. No, wait, hang on a second. I was looking at the wrong one. The 137 between 384 and 391. So probably 387 would be easy enough to get. That's a little lower. And the last one, if I just did an exact calendar spread, closing the May 138 and rolling over to the July 138, I could probably get 138, it looks like there, or excuse me, 438. And so looking at the difference, that's a great return, if annualized return, if I can do stay at the 138. I still have 2%, 2.08% protection from a loss. And the difference between the top one and the bottom one, the three that I'm looking at, between the 136 strike and the 138, it's only about $1 or $100 in potential loss, but the potential gain is about $1 extra, also $100 difference. Doesn't sound like a lot, but annualized it adds up. So it's worth looking at the chart. Here's the IWM chart. It's down a few cents actually. It's from when I just said I was when I just opened it. And it looks like we're right in the middle of the trading range. We're actually on the lower end using this lower bar here. Make this a little bit thicker here so it stands out. That one and this top one here, which is obvious enough. So it looks like it'll hold support there possibly. So I'm not really worried about it going much below 134.25-ish. And that is still above my cost of exercise even on the 138 put. So I'm leaning there. But if it drops below that, it could come down and retest the low from March 27th at 132.50-ish, 132.42, or even come all the way down to 130 where it was back in December. Very possible, but I'm not frightened about it. One of the reasons I'm leaning towards the 138 also and being more aggressive is that my account is still underinvested. I only have all these added together. I only have about, let's see if I can pull it up here. Well, this is a little bit lower now. On 0.9, and that was off a little bit there. But see over here, I'm only 50% invested, so I need to get more exposure out there. One way to do that is to take bigger risks, and then I can still be patient on my other positions because I'm getting more than I'm used to getting. Trying to target usually on 10 to 12%. But if I'm getting 18% on this one, then I can take a chance and get this percentage of my account to go up. So yeah, that'd be 18.7% if I can do that. So let's see what I can get to happen here. I already put the combinations in, the ones I was weighing. These are all the May 138s. Looking at July 136, 137, 138. And I looked briefly at the 139, but I'm not going to go that high. So simple enough. I already put the order in here. I'm ahead of myself. If I go for the middle range, let's see what it would be. 138 would be 438 minus, you can't see it, but I'm using my calculator here, 4.38 minus about 151, not counting any time value for now. No, I didn't do that right. Nothing like trying to do it on the fly. 4.39 I think I can get, minus 1.51. Okay, I'm off here. That's July. So I'm off on what I'm asking for because it's showing on my calculator 288. So I'm hitting something wrong here, but that is, okay, that's July 434. And that's because I do have the wrong one down here. I knew something was off. Alright, I'm going to get rid of that so I don't make the same mistake again. Okay, now we're cooking here. So the 138, rolling it to the 138, and middle ground is around 285. That would be 138 strike here for July, which is, it's creeping up a little bit because it's falling, so that it's actually not helping me too much because I'm losing more on the one I already have short. But let's see, I'll try it at 1. I'll go a penny above where it is, see if it hits. And let's see, so double check my order here. I'm buying back the 138 put, selling July. I'll go ahead and transmit, see if what happens here. And it works right away. It's at 136.43 when it hit, just ticked up a cent. So we'll go over and see. And there we have it. That's the one I did. It's getting away from me. And come on. There. Okay, that looks good. Let's see. Open this up. Getting a little lag here. Total was 283.80. That's good. And I had 156. That's pretty good because I think I said it was at 136.43, so I only paid a penny in time value for the next hour and a half of time, and got 442. So I was looking at 438, so I actually did better. Put this over here at 136.43. I'm looking at almost a 19% annualized return, and I have a 2% cushion, so I'm pretty happy with that. Let me know if you have any questions. Thanks for watching, and subscribe if you haven't, and I will see you all soon. Thanks. Bye.